Bitcoin. Big Bitcoin news right now from big banks, Microstrategy, big buyers, big things just generally happening in the Bitcoin space, particularly. Also, the Bitcoin charts are showing us some pretty interesting things going on right now, both short term and long term, in terms of, well, overall volatility and what it can mean for the market moving forward. So let's go ahead and dive in here and get into it. Now, I want to share with you first my commentary on the Bitcoin US dollar chart. This is the 1-day chart. I've got the $50-day EMA put on here. So that is the yellow line on the chart here. We can see that Bitcoin was basically consolidating right under the 50-day EMA ever since the 24th of July, when we had a bit of a price correction down to 28,900. The price just went sideways basically until, well, today we had a big sell-off. The price got down to $28,500, after which we had a nice rally pull in, bringing the price back above the 50-day EMA. So this could be looked at as a test of the 50-day EMA, assuming, of course, we can continue the momentum here and keep the price up over that 50-day EMA. The daily candle closed basically right at a key level of price support for Bitcoin. So the price support from the 21st of June through until the 24th of July basically came in right around $29,700. So that's where the price got to today for Bitcoin. The new daily candle opening up above that line. We'll see how we go in the next few days, but interesting price action nevertheless. We'll see how that continues, of course, as we move forward, but that has the potential to have been just a nice big fat retest of the 50-day EMA. We'll see how we go, though, with that. Daily charts can give you sometimes a bit more noise than they're good for. Although I do love looking at my daily charts, obviously. It's a very important metric for those closely following the price of Bitcoin. But those monthly charts, looking at the big picture here, now that's where things start getting pretty gosh darn interesting, because realistically, we are in a very fascinating place right now in this overall chart. Remember, we have a bullish cross right now on the MACD. So that's July, gave us the bullish crossover. August, hopefully, of course, we see a continuation for that. But that MACD bull cross gives me a bit of hope in the markets here. But this is the monthly chart, and it's showing me something interesting. Now, on this chart, I've got it color coded. I'll explain it to those of you who are just listening in. Basically, we have Bitcoin going through cycles. So, of course, we have our bullish phase of the cycle, our bearish phase of the cycle, and our accumulation phase of the cycle. Now, from the Bitcoin halving in May 2020 up until really the end of 2021 was our big bullish phase. Now, some might argue the cycle actually ended in April 21, and the second rally up to 69K was a bit of an aberration. So we'll see. We'll see about that. But whether you want to take it from one place or the other, that's kind of where we are with that rally part. Wherever you want to measure it from, the reality is that the bear market came afterwards, brutal, savage bear market, basically from November of 2021 down to November, December of 2022, December 2022 really being the bear market bottom. Ever since December 2022, we've seen the price rally, getting back above the 50-month exponential moving average, back above many actually key indicators. A lot of on-chain data is showing us that the market's turning around. A lot of technical indicators showing us that the market's turning around, not just the MACD, but lots of other things as well. Basically making me think that we are in our accumulation period that comes before the Bitcoin halving. So basically, we are now in a stage where between now and April next year, it's an accumulation phase. Don't expect new all-time highs or anything like that before then. It's an accumulation period. So there's going to be a lot of negative sentiment still in the market, a lot of fear still in the market before we get that moment where people start believing again. And that's when we get our big markup phase happening. And that takes us anywhere between 150 to 180K potentially for the price of Bitcoin, in my humble opinion, of course. Before, of course, the bear market comes in 2025, we hit our top. Nobody wants to sell and everything goes down by 75 to 99% again. Yes. Yes, those will be fun times, I'm sure. I'm sure of it. I'm looking forward to that bear market. Holy cow. But there will, of course, be a lot of money to be made in between now and then. I want to share this chart here with you as well. Alex Kruger actually posted this. This is Bitcoin's realized volatility. Now, this has not been this low since July of 2020. Now, what's interesting on this chart here, he's highlighted 9 different points where we've seen the realized volatility for Bitcoin being this low. Now, what's fascinating is that out of every one of these times, except one, and that time was in November 2018, just before the price of Bitcoin went from $6,000 down to $3,000 as the volatility dried up, the massive descending triangle finally broke to the downside, and the Bitcoin Cash, Bitcoin SV hash rate Johnson measuring competition happened. Those are fun times. If you were around then, let me know down in the comment section if you're around for that kind of fun insanity in the market where you wake up one day and you feel like you want to puke because everything's down 50%. Those were good times. That was the only time that the realized volatility being this low led to the downside. I think that's important to point out because out of all the other examples, that's only back to 2015, but out of all the other examples on this realized volatility indicator, they've always led to the upside afterwards. Now, sometimes those are just short-term rallies. Sometimes those are the new rallies that start new major market cycles. Now, the last time we had the volatility this low, January 2nd, 2023. Do you remember what happened back then? I do. I was here. You were here, probably. If you're new around here and you weren't here back in January, welcome to the party, man. We're happy to have you guys here. Not many new tourists in town these days, so happy to see new investors showing up to the Bitcoin party, to the crypto party more broadly. So if you are new, definitely welcome, of course, to the markets. But for everybody who is from the class of 21, this is a very interesting time to be in the markets. If you're from the class of 2017, 2018, oh boy, you know what's coming. You know what's coming. You guys know what's up. So back in January 2nd, 23, we had that super low realized volatility. And of course, that led to massive upside for Bitcoin. The price of Bitcoin rallied significantly since then. And in fact, 8 out of 9 times when we had realized volatility this low for the last 8 or 9 years, it has meant upside for Bitcoin. Now, maybe this is that one time when we have downside. We cannot predict the future, but it's certainly interesting to note how that has played out over time. eCoin metrics pointing out the year-to-date performance for major assets. Bitcoin, of course, still doing very, very well. This is against a lot of major assets. There's Apple on here, which is up 51% year to date, Bitcoin 77%, Ethereum 55%, gold 7%, NASDAQ 43%, S&P 500 19%. Of course, they did not put Meta on here. If you've ever been holding Facebook stocks this year, yo, Facebook stocks up almost 300% since the lows in November, up like 200% this year. Tech stocks have been going pretty insane. Of course, NVIDIA holders are feeling the new paradigm of money moments with that stock absolutely rallying like crazy too. But out of major assets, Bitcoin has compared very well compared to the indexes. You've been better off holding Bitcoin versus holding the S&P 500, for example, this year. You have outperformed it actually dramatically. Your S&P 500 gave you 19% returns. Bitcoin gave you 77% returns. So that is the reality that a lot of investors are looking at when they're looking at the Bitcoin investment thesis, when they're looking at BlackRock and all these other companies coming into Bitcoin. Yeah, there's a chart of Facebook. It's a beautiful chart, Facebook. I didn't have any, but it's a beautiful chart, Facebook. Don't know. I have mixed feelings about buying Facebook stocks. Anyway, if you are a trader, before we get into the next big charts, if you're a trader, then you got yourself an account over on BYBIT. It is the best place for trading crypto, whether you want to do futures, whether you want to do spot altcoin markets, whether you want to do copy trading. They got it all. And of course, if you use the link down below in the description to start your trading account, you're going to have up to $30,000 in trading and deposit bonuses. So if you are a trader, then go ahead and check it out. Now let's talk about the big news. This is pretty crazy because I want to talk about a little bit of Ethereum news, and then the rest of it's all Bitcoin news, but this Ethereum news is pretty nuts. Since Friday, we have had 6 different companies, Grayscale, Bitwise, others, Valkyrie, apply for an Ethereum futures ETF. I feel like somebody knows something that we don't. So many companies all filing for Ethereum futures ETFs at the same time. That's suspicious. Now, to be clear, these are futures ETFs. There's nothing to get excited about here. If we're being honest about it, futures ETFs can, go suck a fat one, basically, because nothing there. What we want is spot ETFs for Ethereum, for Bitcoin, for all digital assets. I mean, all digital assets, but it's definitely some of the top digital assets. We need to have a Cardano ETF, spot ETF, right? Stuff like this. These futures ETFs are nothing but a way for the manipulation of markets. There's nothing good about them. They're paper garbage. They're not backed by real Ethereum. They're just backed by pieces of paper and dirty fiat dollars. But it's still interesting to see so many of these ETF applications coming at once. So again, I feel like somebody knows something is up. Maybe we'll see these getting approved. Maybe it's a way for the SEC to say, see, look, we're being reasonable. We're approving ETFs for different products, but they're not being reasonable because the products that they're approving are not good products. People want spot access to these assets. Why a spot Bitcoin ETF is so big. And of course, once we get our spot Bitcoin ETF, maybe it's going to take a new administration to do that. Once we get our new spot Bitcoin ETF, Ethereum ETFs will be following hot on the heels. Hear me now, quote me later. I bet within 6 months of a Bitcoin ETF approval, we're going to see an Ethereum ETF be approved. Next big news here for you, and this is a doozy because we've seen so many big stories like this. So the $500 billion Japanese banking giant Nomura has won a license to offer Bitcoin and cryptocurrency services in the United Arab Emirates. Pretty interesting stuff. Big banks, big crypto exchanges, big companies, all, of course, going to where there's regulatory clarity and regulatory approval. And of course, once the UK passes their bill, we're going to see a lot of companies incorporate there as well. They're going to have access to multiple places. But the US, again, totally fumbling the ball. In fact, did you hear the story the other day? Because this is ridiculous. If you haven't heard this, this is just so dumb. Before the SEC sued Coinbase, apparently they told Coinbase, well, if you just delist everything that's not Bitcoin, then you'll be okay. Which, of course, Coinbase said, no, thank you. We're going to continue to operate our business as you approved it when you gave us the regulatory approval to launch our public stocks. SEC, man, I tell you, those guys. But the regulatory scene, well, stagnating in the USA, people in other countries are just enjoying themselves, not worrying about this kind of crap. Also, a lot of big investments this week. $23 billion investment manager IDG Capital increased its share in Bitcoin miner BitDeer by 91,000 shares. So it's about $1 million total investment. It's not that crazy, but it does show you that investments in Bitcoin miners are continuing. People are looking at this and they're looking for regulated ways to get access. That's why Coinbase stocks have been popular. That's why Bitcoin mining stocks have been popular. That's why Microstrategy stocks have been popular, because people want proxy access to this asset class until, of course, we get a real Bitcoin ETF, which is what the market wants. And the SEC refuses to give to people. They're not here to protect you. They're here to protect the status quo. They're not here to help you. They're here to help the bankers. We know this. Simply Bitcoin pointing out that Tether has acquired $176 million in Bitcoin since March 31st. Now, if you remember the story about Tether buying Bitcoin, basically, they're making so much money off of all their US Treasury bills and all their other ways that they're putting our USDT cash to work. So remember, when they issue out USDT, they have a bunch of dollars put into their bank account. They take that and they buy money market funds, they buy treasury bills, all this stuff. And because the rates are so high right now, they've just been rolling around like fat little Bitcoin piggies in just a mountain of cash, and they're just throwing it all over the place. They're buying gold. Interestingly, they're also buying lots of Bitcoin. So they've added another $176 million of Bitcoin to their balance sheet. Tether, man. Tether. Crazy stuff. And of course, old mate Michael Saylor, he bought more Bitcoin. He can't help himself. He is an addict. Michael Saylor has a crippling addiction to stacking sats. Of course, he doesn't stack sats. He stacks Bitcoin, dozens, hundreds, thousands at a time. His conviction in Bitcoin is unbelievable. It's unbelievable, the amount of Bitcoin that Microstrategy has stacked. And I know what you're going to say. Oh, it's only 467 Bitcoin. That's not that much. Well, they have like 152,000 Bitcoin right now or something like that. Plus this. They just issued this. I mean, this is crazy. Check this out. This is crazy. Microstrategy is looking to raise a little bit of money. Just a little bit. $750 million. That's a lot of money. Of course, that's to fund different corporate purposes and stuff like that, but it's mostly to buy Bitcoin. They're doing it again. They're doing it again, man. They're buying Bitcoin. MicroStrategy, once again, is buying Bitcoin, and I love it. Now, I don't know how much of that 750 million is exactly going to go to buying Bitcoin, but I'd imagine a decent amount of it. The way Michael Saylor has been instructing MicroStrategy to stack up all the Bitcoin they possibly can, my guess would be that we could see another $500 million buy, which is a significant amount. That's a lot of coins. That's a lot of coins. And remember, MicroStrategy already has 152,000 coins, and they just keep buying more. And I know it seems crazy right now. And right now, Bitcoin's basically at MicroStrategy's break-even price. So they're neutral on their $3 billion of Bitcoin or whatever their current stack is worth. But let's fast forward. What's this going to be like when Bitcoin is worth $100,000 a coin? They're going to look pretty damn smart then, won't they? What's it going to be like when Bitcoin is worth $300,000 or $400,000 or $500,000 a coin? And I believe we're going to go to those levels. What about $1 million a coin? You might think, oh, $1 million a coin, Lark. Come on, that's a bit ridiculous, isn't it? Yeah. $10,000 used to sound pretty ridiculous too. $69,000 used to sound pretty ridiculous too. But here we are. Here we are, $30,000 Bitcoin. 5, 7, 8 years ago, nobody would have thought we'd get this high. So to see the prices moving up that high, it's going to be the corporate play of the century. Books will be written about Michael Saylor's giant balls. Okay. Also, we're talking about these institutional players getting into crypto. This is from Michaela. She's the business development manager over at BINANCE. So she put up this chart here, which is from Fidelity and Binance Research. Basically, the institutional surge in crypto is no longer a trend. It's a paradigm shift. So a recent study by Fidelity and Binance shows that 81% of surveyed institutional investors are adding digital assets as part of their strategy. Europe, Asia leading the way. Unsurprisingly, US institutional players a little bit more hesitant considering what the SEC has been doing. That's crazy. When you see what's going on, when you see the numbers, when you see the actual conviction of companies that are testing things out, they're trying NFTs, they're bringing in blockchain for supply chain, they're doing all kinds of stuff. They're looking at blockchain for payments. Big potential here. Institutions see it. Institutions are also waking up to the fact that, hey, I better get some Bitcoin before it's too late. MicroStrategy's taking it all. Come on, Saylor, save some for the rest of us. Nope, he's going to get it all. Saylor can have all the Bitcoins. Well, he'll get as many as he can. But that's the great part about Bitcoin. We all have an equal opportunity to stack. Michael Saylor's got as much right to stack as much as he wants. And so do you. And so do as any other corporation coming in. And hey, you better get yours before BlackRock does.